Awesome. Hello and welcome to the event. MoneyHub presents Managing Your Money and Intro to Investing. I'm your host, Doug Shepard, and today we have three awesome speakers lined up for you. We have Chris Walsh, founder of MoneyHub, Anthony Edmonds, founder and director of InvestNow, and Janine Grainger, founder and CEO of Easy Crypto. Each speaker is going to give a 10-minute presentation today, and then at the end, we'll have 15 to 20 minutes of Q&A. To ask questions, simply scan the QR code that you see on the bottom of your screen right now. I'll also post a link in the YouTube live stream so that you can click it and ask your questions. Slido is an awesome platform that you can use to post the questions that you want, or you can look at other people that have posted questions and upvote their questions. The ones at the top of the list with the most upvotes will be answered at the end of the presentations. So first up, we're going to be talking with Chris. Now, Chris used to be an analyst at Merrill Lynch before he read Tim Ferriss's 4-Hour Work Week and decided he'd rather be spending his time building a company he had more control over and doing so in a sustainable way. From there, he dabbled in a few different industries, but found his true calling in sharing his detailed knowledge of all things personal finance. Today, he leads the research team and curates all the content you see on MoneyHub. Chris is now here today to talk to you about how we can better manage our money. Over to you, Chris.
Thanks very much, Doug. Let me just present my slides. Great. So yeah, thanks everybody for tuning into this. Right now, there's so much happening with personal finance space in New Zealand. So we're really happy to be able to present really relevant things. And so the first slide is, sorry, I'm just wondering, oh yes, people can see me. That's fine. Sorry, I couldn't see myself. So we're going to be covering 5 different topics: budgeting, reducing debt, credit cards, savings, plus investing. So just as a background here, for MoneyHub, if you have used it before, we're not financial advisors. That's really critical that we make that clear. What we do is make information transparent by looking at fine print and making everything in plain English. We get about 15,000 people per day from search, Monday to Friday, and that keeps growing, which we're really happy about. We do price and product comparisons for all things money. So insurance, banking, credit cards, investments, KiwiSaver, so many things. We've just added power, and we've just added broadband. Plus, we're also bringing in new guides to travel insurance, which of course is now really relevant, especially in a post-COVID era, or still COVID era, but people are leaving the country. We're a small team, so Doug's part of that, and we continue to grow. And yeah, we bring a range of all different backgrounds, and I think that makes it quite fun. Just as a background to me, as Doug previously said, I used to work at Merrill Lynch. Prior to that, I worked at EY. But at the same time, I didn't really love that corporate kind of grind with the whole very planned days and timed lunch breaks and all that stuff. And so basically, I love the personal finance space, and that's where I sort of about 4 years ago kicked this off, just about 3.5 years ago, and never really looked back. And it's been very supported in New Zealand, so it's always nice to get lots of emails from people that love the site and suggest things. We're only as good as our last sort of suggestion, and there's always new ideas coming in, and we really appreciate that. So yeah, we're just designed to give everyone the information and the skills to be able to make better financial decisions. So if I go first up into something called budgeting. So budgeting is really not that kind of glamorous. Everyone's like, oh, budgeting, am I really going to use a spreadsheet and, position myself and make sure I don't do something because it's not in my budget? It's not actually that practical. So it is quite boring. And sadly, it's not really used by lots of people. But what I know and what is evident is that when people see where their money's spent, because a lot of people don't know, it's just basically gone after every week or after every month, then they change their behavior. So there's been a whole wave. There's been a whole wave of budgeting apps which have come to market over the last few years, and most of them are free, which is great. And what they do is they sync with your bank account, so it's all nice and secure. And then you can actually graph. You can graph where your money goes, and you can see it categorized. These are the type of things which give people. It's fine to look at a bank statement and think, well, okay, that's a big list. But when you see it like in graphs, and when you see it sort of being tracked, that's when you'll change your behavior. So these budgeting apps, they're really popular on MoneyHub. There's about 10 or 12 listed, and they get downloaded all day long. We know that people love it. And I really would encourage people to consider them because they're just a really useful way to get control of your money. And they're just moving on from there. So reducing debt. One thing we see at MoneyHub, there's so much personal debt in New Zealand, and it's alarming because it's just ballooned. It kind of dropped during the start of COVID, where there was less things to spend money on. But since then, all bets are off now, and it's kind of come back up. So I'm not talking about mortgage costs or anything like that, but I'm talking about the likes of credit cards and personal loans and the buy now, pay later stuff and store cards. They're bad. I mean, well, they're not bad, but they are expensive debt. So what we always say to people, we get a lot of emails, is like, look at all your debts and look at the interest rate and make sure that your debt that's the most expensive is paid off first, because that is the one. I mean, it sounds obvious, but that is the one that's costing you the most. So if you've got a 25% interest rate, 26% interest rate, yes, sadly, these are real interest rates versus a 12%er. So always focus on the overpaying to get the 26%. But at the same time, it's not as if you can just pay it all back with life goes on as normal. It really does, come down to how much you're prepared to save and how much prepared you're to forego things that you currently buy. So credit cards, which I'll get to in the next slide, they are a very expensive way to spend your own money. And so for a lot of people out there, it's just it's really tough to clear them. So it really comes down to just resisting things on credit cards, using debit cards, which is much better, and then looking at wants, as something that you shouldn't really be doing unless you can afford it, rather than just, oh, I'll put it on the card because I want it, and then having to figure with it later. With interest rates going up, nothing's guaranteed, even though the OCR, that drives mortgage rates, not so much credit card because they're high enough as it is, but still nothing's guaranteed. So it's always just good to be reducing these debts. This gets me on to credit card. So a lot of questions are asked are like, what's the best credit card? Well, for one in two New Zealanders who don't pay their credit card bill off every month, then I would argue that probably no credit card is best, just because of the cost of that debt. It is so expensive. And we do see a whole bunch of balance transfer credit cards, which we're happy about because that's like 0%. You can do 6 months, or like 1.99% or 2% for 24 months. These have reasonably easy processes to get approved, and it does consolidate all these expensive debts and it puts them all into one card. But then you've got to actually make the effort of paying it all back. It's all very easy to transfer it, but you have to set everything up so you're making those, if it's a 5 grand, 10 grand, divide it by 6, divide it by 24, and really just push as much as you can, because otherwise the debt just comes off that rate and it goes back to its normal rate. So that's what we like to see. We like to see people making, obviously, credit cards. Lots of people can afford them and they have enough money and they pay them off. But at the same time, with 1 and 2 are not, that's just such a significant stat that we really need to be challenging how we're using them, and should we have them in the first place? And then people ask, oh, what card is best? Should I go low interest, or should I go rewards? Our view there is, well, if you're not being able to pay it back every month, then definitely low interest if you have to have a card. Because the reason is, if you get an Airpoints card or some sort of rewards card, there's no way that you'll earn enough rewards to justify the extra interest cost, because those reward cards have 20% plus, whereas low interest can start around 12 or 13. So that's just worth keeping in mind. Something a little bit more positive than all the debt of gloom and stuff is saving. So my last point on the slide is probably the most important. It's too often people get into debt when they don't have any money and they need something really, really urgent. So my view here is just cut back on things that you don't need, download some bank statements and download some credit card statements and just go through them. What subscriptions do you have? What costs are you incurring that you're not finding joy from? And really look at just reducing those significantly, and then build up an emergency fund. And we're looking at $20 a week. Start off with that. It depends, but really after 1 year, of course, that's going to be $1,000. But people get into a lot of trouble when they just have no money and something unexpected happens. So that's why we're all about people just making choices and saving for the short term. Saving every week and sort of being proactive with it, and like sort of raising the amount that they can save, and just having it in a bank account, like a savings account, which you can't touch, and you can only use it for emergencies. It sounds very obvious, it sounds very practical, but I mean, if everyone was doing it, we wouldn't have this rush of payday lenders. We wouldn't have this rush of personal loans, rush of credit cards not being repaid. So it is something to keep in mind. And then finally, something even more positive is for investing. So our site is very popular with the investing kind of queries on Google, and it's never been cheaper to invest. There's been so many great new platforms launch. There's been so many share trading apps come to market even after them in the last 2 to 3 years. And people seem to think that, oh, I need to be in the long term to be, to invest. I don't have anything long term right now, so I'll just put money in savings. But really, with a well-diversified investment, it should be something that you can do in the short term, even if you have a short-term focus, just to build up funds for something specific. And what we see now in New Zealand, it's much more regulated than it was even 10 years ago, when there are a lot of like offers coming out and you really weren't sure how secure these sort of debentures were or anything like that. Now everything seems a lot more transparent. It's a lot more marketed, but at the same time, it just feels a lot cleaner and basically far less shadier. So my point here is, whatever you invest in, because there's a lot of ads. I'm sent a lot of things on Facebook like, oh, have you seen this kind of interesting stuff? Or what do you think of this? Or I got this phone call. Make sure whatever you invest in, that you understand it. That's the most important thing, not the returns, not anything else, because too many people have put money into things that they didn't understand, and they didn't know when to sell, they didn't know how to get the money out. Those two things are absolutely critical. So not trying to sound it like it's certainly not scary, but you just need to be aware of these things. So that's me there. We're coming back for a Q&A at the end, and so please list some questions when you have them. Thanks so much.
Awesome. Thank you so much, Chris, for that. I think one of the most valuable things that I got out of that was really Chris's comment around budgeting, and how downloading the spreadsheets of your credit card statements can really be quite interesting. Because if you go through it with a fine-tooth comb, you'll start to question, why do I still have these subscription payments from something that I don't even use anymore? And you might be able to save, $5 a week or $100 a month even. And sometimes you just don't see these things because day-to-day life is so busy, and you just pay your credit card bill, or maybe you're struggling to pay it, and maybe downloading that statement can really help there. So thanks, Chris, for that and all the other bits of information that you told us there. And as Chris said, there's a QR code on screen at the moment that you can scan to head over to the Slido and ask some questions. And what we'll be doing now is introducing Anthony. So Chris touched on investing and how the best time to start investing, was yesterday, and the second best time is today. And so what we really want to be talking about today are a whole bunch of different investing kind of principles and a little bit more information around that. So we've got Anthony, and Anthony has extensive experience in the financial realm. And this comes from his previous experience as head of sales and marketing at AMP Capital Investors, founding Implemented Investment Solutions, which has over 3.5 billion under management, and launching InvestNow, the investment platform that he'll get into some more depth about very soon. Anthony has been heavily involved with the investing space for many years, and we're really lucky to have him here today sharing some of those investing principles that I mentioned before. So over to you, Anthony.
Thanks, Doug. First up, just a quick shout out to all those boys down there in Castle Street, the second year finance crew that are messaging me, telling me they're watching. Quite amazing platform with the reach and things that you've got, Doug and Chris. I'm going to give you a quick overview of the investment principles that we believe are really important to apply to investing and managing your portfolio. Just by way of background, InvestNow is one of the online investment platforms. We offer a range of managed funds, 6 banks, term deposits, ETFs, all in one platform. So you've got one AML check, but you can access all those different types of investments within your portfolio. We also offer a really unique KiwiSaver scheme where we've got 14 different specialist investment managers all in one scheme. So you can choose between the different investment managers at will. So you can combine managers like Milford, Fisher, Pathfinder, all within one KiwiSaver portfolio. Today, we've got investors managing about $1.2 billion of assets through InvestNow. We've got 25,000 clients, so the average portfolio size is around $50,000 that people are investing. It's really pleasing to see that our 1,000 largest clients have really embraced diversification, where on average they're investing in 8 different investment funds. I guess having founded InvestNow in 2017, I was really amazed by the explosive growth of these online investment platforms, which has been absolutely amazing and great. It is worth noting, though, that this is a pretty lightly regulated space, just because of the growth and sudden emergence of platforms like ours, but also Sharesies, Hatch. It's really interesting to note that we saw explosive growth when we had the COVID lockdown. We think it's no coincidence that sport betting was off the table and that people suddenly joined online investing platforms and started investing for a hobby while they're locked in their houses. So you've certainly seen massive growth around platforms like ours. We think it's really important, though, that people stop and think when they're investing, because after all, they're handling their hard-earned money. And people have got certain traits within them that make them susceptible to being bad investors, essentially. As investors, we tend to grasp at numbers and things that we see. We are really overconfident in terms of what we know. We apply rules of thumbs to everything. We've got a fear of missing out. Equally, when we lose money, it hurts a lot more than making money. And so we're more likely to make rash decisions when we've lost money. And we think it's these sort of things that people need to stop and think about some time-proven investment principles when they're managing their investment portfolios. Within InvestNow, we've got 10 different principles that we think are key. A lot of platforms that we see around have got similar principles, often slightly different, but these are the InvestNow principles, and I'm going to dig into a couple of them today just to expand out how those work. The first one is to have a plan and to stick to it. It's really important that you know what you're investing for and the time horizon that you're investing over. For instance, your investment strategy is quite different if you're saving up for a house in the near future, where you'd want to hold a lot of liquid, low risk investments, or saving for your retirement in where you could afford to take a lot more risk, invest into things like shares within your portfolio. There's great tools around that are easily and freely available. Here on the slide, I've shown the sorted investor Kickstarter calculator, which you can put your information into, and it will come back and tell you what your investment risk profile is and the sort of portfolio that would suit you. We think that investors, in terms of thinking about how to structure their portfolio, can look at tools like this. Equally, they can look at things like KiwiSaver schemes themselves and look at the funds that are available on those to give them a good insight into how to manage their portfolio. Of course, if you don't know where to start, we'd strongly recommend to get advice because it's important that people are guided through their saving journey. Make sure you review your plan annually and rebalance your portfolio regularly to make sure it's in line with your overall risk profile and investment strategy. Another principle that we hold dear to our heart is that diversification is vital. Here we've shown a typical KiwiSaver growth fund, which is made up largely of shares, 80% shares, 20% fixed interest assets, which has been designed to take into account someone with a long investment horizon who's willing to take a bit of risk. The thing to note about this is that this fund is investing over 6 different asset classes. And when we dig into the different growth funds that are available within KiwiSaver, on average, they hold around 1,000 different investment securities. So it starts to give you a really good flavor for how diversified you need your portfolio to be. We think these diversified funds are a really great place to start for investors who are new to their savings and investing journey because they provide all of features of diversification, professional management. They're also well regulated in terms of the funds themselves. So make sure you do think about your portfolio being properly diversified at both a sector level, but also within each of those sectors. A couple of asset classes don't cut it. So if you look in your portfolio and you've just got New Zealand and global shares, you probably need more. 20 or 30 shares as well doesn't really make up a really diversified portfolio. You need hundreds of securities within that. Another thing, and Chris talked about it, is we think it's really important to get on with your investing journey and start investing today. But we'd highlight that investing is also a serious thing that you're doing. We were interested the other day to see the ad where people were being told it's like your first kiss, you just got to get on and do it. But if you bring back the principle of diversification, you'd want to kiss your whole high school in terms of thinking about your initial investment portfolio. And so we think it's really important that people think about investing into things like diversified funds that have got the right risk profile for their investment portfolio. Einstein said that compounding interest is the eighth wonder in the world, which is true. Like, we see a lot being written online about the benefits of compounding. It's pretty evil science though, because I know if you were unfortunate enough to own one of the shares that's had a real fall in recent times, like Allbirds, which is now 75% below its high, like a lot of tech stocks are. If you experience a 75% loss, you need to make a 400% gain to get back to break even. So people need to realize that they're taking real risk when they're investing, and they need to understand that. We see sayings in the market like buy to dip and hodl or hold, and these diamond hands. We think these sayings are great when they're used in the context of a diversified, well-structured investment portfolio. But when we see them being applied to a single asset, like a share, or an asset class like cryptocurrencies, that you need to be really careful that you don't step from being an investor into being a speculator when you're following these sort of things. We see real danger in terms of doing things like buying the dip on individual stocks and securities. In terms of investing, the key messages from me is it doesn't have to be hard. Get into it. It's fun, but be sensible. It is your hard-earned money. We really recommend following time-proven principles. As I've said, diversified funds provide a really good spot to start in terms of your investment journey. As I've said on the slide, they're probably a little bit boring, and I find that sort of a really good reflection point. Is if you find what you're doing is a little bit boring, it could well be that you're investing properly. Whereas if you're finding life really exciting on an investment front, it's probably because you might be tipping towards speculating and taking too much risk within your portfolio. We see real benefit in terms of looking at what professional funds are doing, in terms of starting to think about how you can structure and build your investment portfolio. So I'll leave it there and come back and pick everything up in the Q&A section, Doug.
Awesome. Thank you so much, Anthony. Just a real wealth of knowledge there with all the different tips that Anthony was sharing with us. And I think one of the really important ones was that point around diversification, and another one around, as Anthony was saying, investing. It's something that we are all here to encourage everybody to get into, but at the right time. And as he says, it is a serious matter. If something goes down by 75%, it has to go up by 400%. And those type of numbers really make you think, I really need to be taking the time to research properly about what I'm investing in. And that's why we've created this event today, really. Like, we as MoneyHub exists to help people make better personal finance decisions and educate people around all this stuff. And InvestNow and Easy Crypto have awesome platforms to allow you to invest and make these decisions, but they also both have a wealth of educational resources to help you learn about these things. And when they come onto our events today and talk about these things so that you can ask them questions, it's all for the benefit of New Zealanders so that we can really try help you understand and get some of that research done. So don't forget to scan the QR code and ask those questions so that you can get your answers from everybody here today. And with that, I will introduce our third and final speaker, Janine. So having worked as a strategy manager for Westpac and Air New Zealand, among a bunch of other roles, Janine has cultivated an exceptionally strong strategic mind. A few years ago, she saw an opportunity to help educate New Zealanders on the world of crypto and ensure we were able to purchase safely and with low fees. From there, she has grown the company and helped so many understand this world of crypto so much better. Now Janine's here to help us yet again by walking us through some crypto-related topics. So I'll hand it over to you, Janine.
Cool. Thank you so much, Doug. And thanks for having me on. Great to follow up from what we've learnt with Chris and Anthony so far. So I'm here to talk about cryptocurrency. I thought I would give a really sort of start from basics 101, because I know for a lot of people, this is a bit of a confusing topic and something that we don't always know a lot about. And then I'll talk through a couple of sort of common crypto myths and also what we're seeing in the market here in New Zealand. So first up, what is crypto? The question on everybody's minds. Really, cryptocurrency is just a way to exchange value. And in light of that, it's like another evolution in money. So we started with, barter, and people traded things that had value that translate into gold, then metal coins, paper money, plastic cards. And at each step of this process, when this new way of doing money came out, people be like, whoa, that's, plastic cards, that's not real money, paper money. And it's the same with cryptocurrency. It's just another evolution, another step along that path, and something that's a little bit confusing and a little bit foreign until it starts to become second nature, which is, I think, where we will see digital assets heading. So cryptocurrency is really just a digital way of doing money. And that digital aspect is really quite fundamental and important. Before the start of Bitcoin, which was the first cryptocurrency that sort of graced our world, money was not digital. You could have electronic money, seeing money in your bank account, but it's not truly digital. And Bitcoin created a way to make money digital, to make value exchange digital, that was completely decentralized. So you didn't need to have an intermediary, whereas previously, every time you want to transfer money, you either need to be face-to-face with someone so that you can hand it over in person, or you need to use an intermediary that both parties trust. So that intermediary could be, MasterCard or your bank or a lawyer or something like that, but you have to have that intermediary. So that was the big revolution that Bitcoin created, was a way to do value that was digital and didn't need an intermediary. And it did that in a way that's completely trustworthy. And so when a payment is made on the blockchain, you know without a shadow of a doubt that it has happened. It cannot be reversed. It cannot be faked or fraudulent. It's good as gold if you see it on the blockchain. So on blockchain, I'm not going to dive into this. I could do a whole hour-long presentation on this, but blockchain is a term that you'll often hear in relation to cryptocurrency. And really, it's just a database, so like a ledger of transactions. And it's a database that's fully public. It's uneditable, so that's what gives cryptocurrency that trust and that reliability that a transaction, once it's on the blockchain, is legit. But it's also programmable, which has a whole lot of interesting results from that, a whole lot of interesting things that we can do. And if you think about programmable money and what that might mean in the future, you can probably see it's a little bit like the internet, where we've got this ability, this technology that we haven't really started scratching the surface of, but there's a lot that we can do with this. So I think on cryptocurrencies, just sort of on that very high level 101, there's two things that I think is really worth calling out. One is that cryptocurrencies are very diverse. So they're not, you often hear cryptocurrencies all lumped in together, but they're all very different and they do different things, and they're also evolving. And that's a really important consideration, that Bitcoin came out and was this first generation of cryptocurrency. It wasn't necessarily the best cryptocurrency. It's not the fastest, the cheapest, or the most environmentally friendly, but it was that first iteration. And then humans, we're great at innovation, we're great at evolving things. And so we've evolved cryptocurrencies into these generation 2 cryptocurrencies, which bring in smart contracts and really leverage that idea of programmable money. And then generation 3 came out, which tried to solve some of these problems with scalability and speed and cost of transactions. And generation 4, I don't think we've seen it yet, but I'm willing to bet that the space will keep evolving and will keep growing. We'll keep seeing new and different ways of doing digital money coming out. The other thing that's sort of interesting to think about with cryptocurrencies is that they have parallels to traditional assets. They're not, one-for-one parallels, but you can sort of look at things like Bitcoin as being kind of similar to gold. It's not a great payment currency. You don't go into your local coffee shop and shave off a tiny piece of gold to buy a coffee. Similarly, you probably wouldn't want to use Bitcoin, but you might want to use it as a store of value. You've also got currencies that give you passive income or interest income, kind of like a term deposit. You've got currencies that act as an infrastructure, and you sort of, kind of get rent off people using that infrastructure. You've got, new projects that might succeed or might fail, and they're a bit like angel investing. If you get in early, you might have a great return, but 99 times out of 100, those early stage startups probably won't last, and that's the risk of angel investing. And then you've also got the digital equivalent of art and collectibles with NFTs. I thought I would address sort of two of the big crypto myths that whenever I talk to people about cryptocurrency, that I typically get these two questions. So I'll jump in with what the first main question I get from people is, isn't cryptocurrency just used by criminals? And actually, cryptocurrency is terrible for criminals because this is a network that is completely transparent. So like I talked about with blockchain at the start, if you make a transaction on the blockchain, that's a public record. So people can see where funds move from, where they move to, then where they go next. If you're committing crime, you don't really want to use a traceable and transparent system to do that. And that traceability is becoming more and more advanced as people build the tools that help you understand what's happening on the blockchain. And again, this is something I could dive into. It's a very fascinating subject, but suffice to say that at a top level, it is transparent, it is traceable, and as it becomes more and more regulated, it's increasingly a bad place to try to get away with crime or money laundering. And second, the myth that I get a lot is that crypto is destroying the environment. And this is a bit more complicated. As I talked about at the start, Bitcoin isn't the best currency for the environment. But when you look at this one, it's all about perspective and transparency and innovation. So I'm just going to talk through each of those things really quickly, just to give you a little bit of insight into this. The first one around perspective, there is a whole lot of stats on who uses what power. Unfortunately, Bitcoin tends to get a lot of headlines because it's nice and easy to compare Bitcoin to, say, XYZ country. But tumble dryers in just one country, in just the United States, use more energy than Bitcoin does. There's a whole lot of things that use more energy than Bitcoin does. And it's all about the perspective of, does that make tumble dryers good or bad? Should we outlaw them? Or, how is that energy actually being used, and what's the result of that? But I think the key thing here is actually that it's about transparency. And when you use cryptocurrencies, you get a really clear, clicking on here, you have really clear visibility on the environmental impact of what you're doing. So if I were to buy a share on the share market, I don't know the environmental impact of that share purchase or of the company that I'm actually investing in. Or say when I go on holiday and take 100 photos, and those photos are all saved in my cloud storage, how much energy am I using by keeping those 100 photos where really probably only 10 of them are any good, or one? The point is that with Bitcoin, you have this really great transparency of the impact of your actions, and that's transparency that's really lacking in other places. And the great thing about this transparency is that drives change and innovation. So I talked through earlier those different generations of cryptocurrency. Bitcoin is energy intensive, but the second and third generations pretty much don't use any more energy than running an application on your computer. And Bitcoin itself, even though it's probably going to be hard for Bitcoin to clean up its act and become less energy intensive, it is doing a lot to become more energy, greener in terms of the energy that is being used. So over 50% of energy used in Bitcoin mining is renewable, which is a really phenomenal stat. Not many countries in the world achieve that, and Bitcoin's out there doing it, and obviously this transparency helps drive innovation. So last thing that I thought I'd talk through quickly is just around what we're seeing in the New Zealand market, what's popular and why. So currently in New Zealand, what we're seeing is Bitcoin is still the most popular coin traded. Around 27% of all of our transactions are Bitcoin transactions. But it's not, for the most popular coin, it's still not far ahead of other relevant competitors, like Ethereum is at 21%. We see stable coins, I put USDT and USDC together here, make up around a quarter overall. And then it's really this long tail of lots of different cryptocurrencies. So at Easy Crypto, we sell over 160 different cryptocurrencies, and there's thousands, tens of thousands out there. So it is a huge market and a lot of choice there. And we are seeing that New Zealanders like dipping into lots of different cryptocurrencies. Most people have, a couple of different things in their portfolio. And to Anthony's point before around diversification, if you are looking at cryptocurrency as an investment, look at diversifying into cryptocurrency. So considering that as the right balance within your portfolio, and then also diversifying within cryptocurrency. So looking at perhaps not just buying one coin, but spreading across a few different types of coins. The reason that we see people buying cryptocurrency is firstly as a diversification strategy. So, again, this is a high risk investment, or, should be looked at as part of your high risk component of a diversified portfolio. But that's the whole point of diversification, is to sort of spread across different risk profiles and different reward profiles. And, not financial advice, but, I personally have cryptocurrency in my portfolio as part of that diversified strategy. There's also a potential of it to be a hedge against inflation. And this is a really interesting one that I think we'll see it play out a bit more over the next little while. But some cryptocurrencies, and Bitcoin in particular, are non-inflationary. There's only ever going to be 21 million Bitcoin. That number's not going to increase. And so it acts quite differently from other currencies where the amount of the currency increases over time, and that can lead to inflation. And then lastly, and my favorite reason for looking at crypto as an investment is because of a belief in that underlying technology and the actual real world use cases of it. And there's so much happening in the crypto space where these currencies are having real world applications, really changing things, creating efficiencies and making, creating that ability to transfer value and to do programmable money. And that has a really amazing real world applications, which is pretty exciting. So to finish up, I think it's one of my favorite slides to sort of look at cryptocurrency and where we are at in the adoption curve is to compare it to the internet. And if you look at this sort of adoption of the internet over time, logarithmic scale here on the left, so it's actually a very big exponential growth curve. In internet sort of equivalent terms, we're about at 1998. So we're still very early days in terms of cryptocurrency adoption. But as I've talked about, I think this is really the way of the future, and it's going to be a great space to watch out to see what happens next and where the space goes to. Thanks.
Awesome. Thank you so much, Janine. I think there's just so much information there that was just awesome to really go through. And I really love the parallels that Janine drew between, I guess, the world before crypto and the world with crypto now. And as Janine finished on, the world of crypto is expanding and developing and innovating, and it'll be really exciting to see what happens next. One of the really interesting comments from Janine actually was that Bitcoin is non-inflationary, and I'll get everyone back on screen because one of the first questions for the Q&A that I have seen is investing in a high inflation world. What should I be doing? So I want to pass it to you, Janine, first, and then we'll go through Anthony and Chris just to have a little comment on each of those. So what do you reckon? Investing in a high inflation world, what should people be doing?
I actually feel like this would be one for Anthony and Chris, because from a crypto perspective, yeah, definitely there are some cryptocurrencies that are non-inflationary, and the theory is that those will hold up well against, in a high inflation time, but it's still too early days. We haven't seen this ride out yet. So, definitely look at diversifying some into crypto to hedge against inflation, but I wouldn't bet the horse on it because markets aren't always rational and we may or may not see that hedge work out.
What do you reckon, Anthony?
Look, it's pretty simple, Doug. From my end, it's just stick to a well-diversified, properly structured portfolio. It's time proven. It's worked through, through a wide range of different events in terms of investment markets, inflation, etc. So, yeah, it's just a matter of keeping diversified and sticking to your long-term strategy.
So that's my view as well. If you're about to ask me, exactly the same. Yeah.
No, I mean, it seems like there's a very big general consensus between everybody that, diversifying, creating well-balanced portfolios is the way to go. Diving deep on maybe just one stock or coin might be a little bit troublesome and can see a lot of shifts and stuff. And there's another question here, actually, which is directed against Chris and Anthony, which is a view on index funds. So I mean, we know that you like them from your comments about diversification, but is there anything that either of you want to add on kind of why index funds are something that you promote so heavily?
Chris, yeah, I guess within InvestNow, we've got both index funds, active funds, we've got socially responsible funds. We're really big believers in a wide range of choice. We don't think that there's one right or wrong way to manage your portfolio, but certainly we're seeing a lot of index funds now available to investors that they can use, giving them the benefits of low cost investment exposure. But equally, as I said, they sit well alongside things like active funds as well, for people to structure their portfolios.
Yeah, look, there's no right or wrong answer there. We've got a guide to sort of active funds versus passive funds, or sort of looking at sort of index investing as a whole and comparing it. But really, as long as you're comfortable what you're investing in and it makes sense to you, and that's what you think is going to be good, and it's got a good track record, then that's what you should be looking at, not so much the structure of it. But index funds are always going to be around. They're very cheap, and as part of a diversified portfolio, they're great. I mean, if you're choosing a lot of things, it's just a sensible idea to keep them in mind. So yeah, they'll be around forever.
Nice. And on the kind of topic of funds, we actually have another question directed at you, Anthony, which is from the Vanguard funds perspective, how do they work for a New Zealand taxpayer?
Yeah, so because the Vanguard funds that we've got on InvestNow are Australian unit trusts, they're taxed as global shares, so they're taxed under the FIF regime, so the foreign investment fund regime. It means people who have got less than $50,000 invested into global shares only pay tax on the dividends that they receive from those. But if someone's got more than $50,000, then their tax is a little bit more complex. They have to figure out their tax under what's called the fair dividend regime, the FDR regime, or in the event they make a loss on all their global shares, they can switch tax treatment. So it's a little bit complex actually, Doug, but we've got guides outlining how that works for people. Tax on these offshore fund structures can be complex though. You've got to be aware that there can be tax slippage and things inside them. And so I think that New Zealand investors, they need to do their homework when they're investing into offshore fund structures, whereas often PI funds, which we've got a lot of as well, are more user-friendly in terms of tax and the way they're structured.
Yeah. And with the kind of complicated nature of some of these things, as you said, you've created some of these resources to help people be more educated and know what to do. And so with these questions that people are asking, what we'll do is we will send the answers to these questions out via an email, and we'll throw in some of those resources as well so that you can have a read up on them. And we'll throw in the slides as well so that everybody can have a look at them. Another question we have, jumping back into the world of crypto, is for Janine here, what's your view on Tether?
Yeah, I've actually seen quite a few questions come in on Tether, algorithmic stablecoins, and sort of along that line. So I might just give a more holistic answer around this. 2 or 3 weeks ago, for anyone who was watching the crypto markets, there was a bit of a meltdown with a currency called UST, which is a stable coin. There's a number of different stable coins out. Tether's one, USDC, UST. Sorry, I typoed my voice before and said USDT and melted down. It didn't, it was UST. But yeah, there's a lot of these stable coins. The concept is that they're pegged 1-to-1 with the US dollar. So if you hold one of these coins, it's worth $1 and that's a stable exchange rate, which means you can use those coins for things like trading, for holding your funds, and you don't have to worry about the volatility that you see with things like Bitcoin. However, not all stablecoins are created equal. Some of them are backed 1-for-1 by actual US dollar reserves that are held in audited bank accounts. To the best of my knowledge, USDC works that way. Others like Tether or USDT are backed by reserves, but there's a little bit less clarity about what those reserves are held in, and there's a little bit less certainty over the auditing of them. And then others like UST are backed algorithmically, which means that they are coded up in such a way that the intent is that supply and demand forces will cause it to remain in equilibrium. So if it rises above $1, that will cause people to sell, which drops it. If it goes below $1, that will cause people to buy, which increases it. So that works great in theory, but in practice, these things need to be stress tested and they need to be able to work at the extremes, not just, on a standard run. And there were a lot of people sort of calling out problems with UST before that it went down. Its demise was caused by a big drop in the price of Bitcoin, which impacted its sort of auto balancing techniques. And that then caused what in the traditional financial world is a run on the bank when everyone tried to sell out. And that, of course, meant the price plummeted even further. So my sort of overall view on stablecoins is they're good, they're really necessary. There's something that we want in the crypto environment and sort of, in finance more broadly, to have a digital asset that has a stable value, but they do need to have probably a little bit more regulation and oversight to give everyday consumers safety and knowledge when using them. So, something as simple as like we have with bonds, you have a rating of, it's a AAA or it's a B- or something like that would give people at a glance the ability to see how safe and how trustworthy is the stable coin and the way it's backed. And obviously there'll be different levels of risk, but I think giving people the knowledge and insight on that is the most important thing. So watch the space for more regulation here off the back of the UST meltdown, I think.
Yeah, and that's actually a really interesting one because there's a lot of people that have been asking questions around kind of the regulations within this space as well. So you've just touched upon a couple of, I guess, areas there where some improved regulations would really be helpful for the, every sort of investor really. But what other kind of regulations or, whether it's getting more stringent or less, would you kind of like to see within the crypto space?
Yeah, Anthony touched on this earlier when he talked about some of the, share investment sites being lightly regulated, and I'd say crypto's in the same bucket or possibly even lighter. So there is good regulation of companies like Easy Crypto. We're regulated for things like anti-money laundering, some sort of levels of financial service provision. We're regulated for consumer guarantees, Fair Trading Act, that sort of thing. But there isn't really any regulation that's specific to cryptocurrencies. If they tick certain boxes, they'll get trapped within the existing financial services and Financial Markets Conduct Act. But if they sit just outside of that, they don't. So I think there's definitely room for more regulation in the space, but it's a fine line for regulators to walk between enabling the protection for consumers, which is ultimately what this regulation needs to provide for, whilst also enabling innovation. And if you try to regulate based on how traditional financial markets work, you wouldn't be able to get any innovation in this space because it's just so different. And so that is a fine line and it's a hard one for regulators to work. But what I've been seeing from, New Zealand's not quite yet at the stage of having these discussions, but in overseas markets in the US and UK, Australia, they're all talking about how they can promote regulation that enables innovation. And that's a really encouraging sign.
Awesome. And I guess it's just kind of a matter of watch this space, right? As you say, some of the overseas bodies are already giving it a crack. So we'll see what New Zealand does, and I'm sure you'll have a lot to say in that space as one of the main kind of voices for crypto in New Zealand. So it'll be really exciting to see what happens there. Jumping back into, I guess, one of the main topics that Chris was talking about of budgeting. There's a question here, Chris, for you of the best budgeting app. What do you reckon that is?
So you'd have to look at our guide because there are sort of different options for different people. But I did notice people ask about the security of them. How do we know if they're secure? So never download something or never install something that you don't know what it is. A lot of people advertise in this space. A lot of people want your details. There's ways to get scams, not trying to make people paranoid, but make sure, preferably if it's New Zealand based, then you've got trust there. Like read through the questions, make sure it's got social proof and that it all makes sense. And then if you have any doubts, do contact them, look for online reviews about them. So we actually review lots of them anyway, but you just need to be comfortable with it. So, which one's right for you? Some of them are paid, some of them are free, but it is worth just stress testing them and maybe download a couple, but make sure they are, legit, because anyone can run an ad like, oh, get paid to, basically get paid to run a budget app. And then suddenly someone's got your details. A very murky world out there, but I see it all. I get all the forwards. So just be very careful and make sure you know what you're doing and that it's a legit company. But one may work or two may work, but you shouldn't have to pay for them. Some of them are paid, but just go on a sort of a finding mission from our research and see what's right.
Yeah, awesome. And that tackles, all those questions about security. So perfect. And Anthony, there's actually one here around kind of a strategy question. So if I have $100 per month or $1,000 per month to invest, should my strategy be different?
No, I don't think so, Doug. Is the bottom line is that, through platforms like InvestNow, you can readily invest that sort of lesser amount of money, and you can build a diversified portfolio by investing into diversified funds as well. So I don't think your strategy is different based on the amount of money that you've got to invest. Your strategy differs based on things like your investment time horizon, your attitude to risk, what you're investing for. It's those sort of factors that drive it, not how much you've got to invest.
Cool.
And it's
Perfect.
interesting, Doug, because we, through the wider work I do, I get to see some really big investors' portfolios, and always really interested to see that a lot of them are really simple in terms of the way that they're structured, using funds that we've got available on platforms like InvestNow to get that diversification. They're often a lot more simpler than people think.
Do you often find, I guess, like the people with higher or larger amounts of money are investing in maybe like more conservative things, or do you find that they are maybe like more risky, or what do you kind of reckon there?
If you're fortunate enough to have a lot of money, Doug, I suppose, you're always thinking when you're investing about essentially funding future liabilities, like things you've got to pay for. And I guess if you had a really large amount of money and you were fortunate enough to be in that position, you can sort of afford to pay your liabilities in the future. So you can inevitably or luckily, I suppose, afford to take more risks. So you do see where people have got very large amounts to invest, often because they've got those sort of, I guess, future things they need to spend money on are covered, so they can afford to take more risk within their portfolios.
Awesome. Well, Anthony sees it all, so he knows what he's talking about. And a question for Janine, similar to the budgeting app one, actually. But Janine, what do you reckon the best crypto wallet is? There's obviously different types of wallets for different types of needs. So I'll pass over to you to kind of explain that and give us your thoughts.
Yeah, sure thing. So, a cryptocurrency wallet, for anyone who doesn't know, it's where we technically don't store your cryptocurrency in there, but it allows you to access it. So you can receive crypto into it and you can send cryptocurrency out of it. It's obviously digital, like cryptocurrency. So you can have it as an app on your phone. You can use a website. You can use a third-party service. Or you can also use a hardware wallet, which is like a little physical USB device. So I look at wallets like you would look at where you store your money, right? If you want to put it in your back pocket and your, everyday wallet, carry it out with you where you don't want to take out more than you're willing to lose. So if you'd be happy storing like $50 or $1,000 in your wallet in your back pocket, that's how much you should be keeping on an app on your phone, because it's a little bit riskier. But if you're storing your whole life savings, you'd want to secure that really well. And that's where you should be using a hardware wallet, or at the very least, finding a wallet that enables 2 or 3 factors of authentication, but preferably a hardware wallet. That's definitely the best place to keep larger amounts of cryptocurrency.
And is there like a particular like type of wallet provider or anyone that you might direct the kind of viewers to go research at all? Or do you have like a guide or something like that you would recommend at all?
Yeah, we've got a lot of different articles about wallets on our website. I'm just pulling up some of the wallets I use. Part of the problem with cryptocurrency wallets is that they don't all store all of the coins that you want to buy. And I should, I'll maybe put a little what do you call it? Surprise announcement out there. Easy Crypto is bringing out a custodial wallet very soon, and we will longer term be storing all of the coins that we sell on it. So that will sort of help remove that pain point of, I'm looking at my phone and I have 5 different cryptocurrency wallets. I've got everything from Edge, Exodus, Trust Wallet. There's a whole lot of different wallets out there. Do check out our website though. We sort of do a lot of reviews of the pros and cons of the different wallets, and it really depends on what you want to use it for. Do you want to have staking income? Do you want to store a wide variety of coins? Are you focused on security? Like, those different trade-offs will help you choose the right wallet for your situation.
Perfect. And similar to before, we'll grab those links off Janine and send them through to you. And then another question actually for you, Janine, there's one that you just kind of touched on actually, but it's what are some ways of earning passive income with crypto? I've heard about staking and running nodes, but how do you start?
Yeah, this is a really good question. I think I'll start with touching to what Chris said at the beginning around frauds and just being really careful around investment opportunities. If anyone rings you up or emails you with an investment opportunity, it will be a scam. So don't click on anything or answer any phone calls. But if you're wanting to go out and sort of do your own research, that is absolutely the best place to start with this. So staking and nodes are two of the different types of passive income opportunities with cryptocurrency. Start with reliable sources of information. So again, you can come to Easy Crypto. We've got different articles on how, ways to make money with cryptocurrency, or go to, CoinDesk, some of the big names out there in cryptocurrency who can give you, unbiased sort of information on different passive income opportunities. And then make sure you review and research anything that you look at investing in. There will be some, the newer the project and the less time it has had in market to prove itself, the more risky it is. And you want to look at, what are the really safe ways that you can invest, or if you're happy to take on more risk, again, just make sure that you're sort of putting that within your tolerance of how much you're prepared to lose if you're going for a bit of a riskier investment in something a bit newer.
Awesome. Perfect. Thank you so much for covering that. Now, Chris, we've got a question for you with regards to credit cards. Someone said they don't have a credit card, but when traveling, companies like rental companies for cars and sometimes hotels require a credit card, which can make things quite difficult. Is there something else that I can do instead?
Yeah, so the view there, if you do find yourself in that situation, is you can get free credit cards, and just lower the limit and just almost, or you could actually fund it. So maybe put $1,000 into it, which will cover your rental car guarantee or anything like that. But yeah, I mean, that is the one limitation there. With some hotels only want to take credit cards now, probably after COVID. A couple of years ago, I had a minor dent on a rental car that was $4,500 on a credit card. So they do have their sort of need, or so they do have their purpose, but at the same time, you don't need to be using them for for everything. But we do have a guide for free credit cards, and so basically that means no annual fee, and they don't give much away. They probably don't give away any sort of points or rewards or anything, but that is a backup option. And if you do make payments of it, of course, so if you do use it, then always just repay it. But that could be a backup option to be able to facilitate travel and things like that.
Awesome. That sounds perfect. And so I think we'll wrap up there. That's been a really, really nice Q&A section. First of all, just want to say thank you to all the presenters, Janine, Anthony, and Chris, for joining us today. And thank you to all of the people that have tuned in to watch this live stream. We hope that you got something out of it. And for those questions that have remained unanswered in the Slido, we will make sure to answer those when we send out the slides and all of those information, articles and links that I discussed before. We'll also send out a quick feedback form. It'll take like 1 minute. If you'd like to fill that in, that would be really awesome. We'll use that feedback to help craft the next events and make them better and better each time. So we got slides, we've got feedback forms, we've got answers to questions coming. And with that, we'll wrap up. And thank you, everybody. And we'll be signing off now. Cheers.
Thanks very much.
Thanks.